Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehi Shah. With me is Ashesha Advario, and this is a show where we are going to be taking you through all the buzzers in today's trading session. Mind you, there are lots of these stocks in focus today, either on the back of some block deals or brokerage reports or their earnings. And we'll also be bringing our technical expert on board to give you a tech check on some of these stocks. So before we do that, Ashesha, let's take a look at what the market is up to. And we've seen some recovery, but nonetheless, we're struggling to hold on to that 24,800 mark.
Well, yes, we did try to recover from the lowest point of the day, as you just mentioned, but Nifty is now down nearly 30 odd points below that 25,000 mark. Nifty Bank, however, is outperforming in today's trading session, holding on to some marginal gains in the red, nearing that 55,500 mark. In terms of individual sectors, we have FMCG index, which is impacted the most, and that, of course, is led by ITC, the big block deal, and we'll talk about that in just a bit. Apart from ITC, we have Nestle, which is down nearly 1.5% in trade today. We have Tata Consumer Products, United Spirits, Imami, all of them reeling under pressure in today's trading session. But auto stocks, they also are in slow lane today. A whole host of auto stocks are under pressure. Bosch is the biggest loser from the Nifty Auto Index. It is down 2.5%. Bosch, apart from Bosch, we have Bajaj Auto, MRF, M&M. All of them are declining in excess of 1% in trade today. But Snehi, let's get started with all the stocks that are buzzing in trade today.
Absolutely. Let's throw the spotlight on some stocks in focus today. Before we do that, let's welcome on board our technical expert for the show today, and that's Sachin Gupta, Senior Technical Analyst at 5 Paisa Capital. And from our in-house research team, we have Ravinder as well as Kanishka joining us. Good afternoon to all of you. And Sachin, before we come to you, let me highlight RCF, one of the earnings candidates that's in focus today. It's been a weak to inline set of mixed to inline set of numbers coming in for RCF. Revenue for quarter 4 has come in at 3,730 crores compared to 3,880 crores, which is down almost 4% on a year-on-year basis. Net profit has also taken a little bit of a knock, coming in at 72 crores compared to 95 crores, which is down almost 24% on a year-on-year basis. EBITDA 2 at 178 crores compared to 195 crores, which is down 8.6% year-on-year. EBITDA margins have seen a slight contraction, coming in at 4.8% compared to 5%, which is a downtick of 25 bips on a year-on-year basis. The company has attributed the decline to on pressure on pricing and input cost volatility, which weighed on operating margins. The board has recommended a final dividend of 1.32 rupees per equity share. So that's the earnings roundup of RCF. Largely mixed set of numbers coming in, but the stock is reading under pressure, 2.4% lower as we speak.
But apart from RCF, there's another stock that's reeling under pressure, and that's Tata Chemicals. Sachin, you've picked this stock for us. The stock is sitting with a cut of 0.3% today, 897. Where do you see the stock headed from here on?
Well, very good afternoon, and thanks for having me today. And well, if we talk about the Tata Chemicals, so I believe that it is showing us some sign of bullish reversals, supported by the strong short covering moves and decisively breakouts above the 100 days of moving averages. And usually this type of technical development suggests a significant shift in the market sentiments from bearish to bullish. And as well as if you focus on the RSI, it is also nearing to the 65 levels, which is also pointing out some increased momentum. And surge in volume activities also confirm the bullish, the buying interest among the traders. So based on that, all the setups, I am expecting some upside momentum in the Tata Chemicals for medium to long term. And on the higher side, 960, 980, that could be the levels which we can consider as a target. While on the lower side, support is placed near around 870 levels.
Okay, so that's the view coming in on Tata Chemical, but let's talk about the biggest loser on the Nifty 50 index, and that is ITC. As we mentioned, on account of a big block deal that happened, the stock continues to remain under pressure. ITC is the stock that we are talking about. 8 block deals happened today, 2.7% equity changed hands, and about 333 crore equity shares changed hands in today's trading session, because of which the stock is reeling under pressure today. In fact, BAT is the seller in this particular block deal, promoter which currently holds 24.5% stake in the company. They've pared down their stake, 2.7% is what they've sold, and they've officially said that net proceeds from this block deal stands at about 12,100 crores, which will be utilized to extend share buyback to the tune of 200 million pounds. So ITC, that's the stock that we're talking about, and the stock is reeling under pressure on account of that block deal that took place today.
Okay, so well, that's ITC stock that's now fired on air. 3% downtick coming in on ITC on the back of the block deal that Achecha just talked about. But ITC will be in focus, and it is in focus today as its top investor. BAT has offloaded stake, is what we understand. But what does it mean for the stock going forward? Let's revisit Nikunj Dalmia's take on the same. Listen in.
See, the stock will get top because ITC is one stock where supply has not been there. It's only that BAT has decided to sell in last 24 months that the supply for ITC now seems to be really opening up. You know, the thing with FMCG companies is that they don't dilute and promoters don't sell. So ITC has become this special situation stock where BAT, which is one of the original promoters of ITC, they are looking at selling it down because they really are in middle of what could be called as a buyback program in their parent country. So this is a sizable offering from BAT, and ITC is one of those stocks where you buy and hold the stock, and with this kind of a supply which has come and hit the market now, I don't think fresh buyers will come back in a hurry. As it is, ITC has done nothing in last 1 year. So these are those pension funds and large long-only funds. When they're buying it, they may be the buyers when the BAT block deal will go through. But this will ensure that in the near term, ITC, both in terms of demand and appetite, and also in terms of the price action, the price action really could be restrictive. It's no longer a cheap stock. I mean, I would say that ITC is now fairly valued, and the function of how ITC stock would move would be a function of what will happen to the paper business, tobacco business, and the FMCG business. And those businesses, I think, are growing, and the stock, I think, is pricing that in. This kind of a supply in the near term may just cap the stock price for an extended period of time. It may just act like a lid for the stock closer to 420, 430. So the upside, again, I'm repeating myself when I say that the upside automatically will get restricted.
That's the view coming in on ITC. The stock is reeling under pressure on the back of that block deal. But we also have NLC India, which is in focus today. The stock, however, has given up most of its morning gains. But Rabinder, tell us, why is the stock in focus today?
Well, as NLC India is in focus, our company has declared as a preferred bidder for Samadhi phosphorite and limestone block and Raipura phosphorite and limestone block of Balod, Chhattisgarh. Subsequent to the critical and strategic mineral blocks, our e-auction held from on the 15 May and 16 May 2025 by Ministry of Mines, Government of India. So back of this stock is up more than 1.5%.
Okay, so that's the reason why the stock is in focus. Stock doing okay in today's trading session. Let's talk about Jio Financial, Sachin. That's a stock that you've picked out for us. Last 6 months, the stock has taken a little bit of a knock. A 10.5% knock is what we've seen. Last 1 year as well, the stock is lower by 18%. But last 1 month, a stellar recovery. Last 3 months as well, we've seen some very good recovery on the charts. Tell us what are the patterns you're watching and the levels that you're spotting going ahead.
Well, so overall, Jio Financial has shown a sharp recovery since hitting its all-time low in early March. And now the stock has again strong momentum on the both daily as well as the weekly charts. It is also forming like a higher top and higher bottom formations, and along with the the surge in volumes activities. So I think this momentum will continue further, and as long as the stock holds above 270 levels, the bullish momentum is likely to be continued. On the higher side, 320, 325, that could be the targets which we can expect further in the near to short term. While on the lower side, support is placed near around 270. So one can look for the buy even at current market price also, with the strict stop loss at 270 for the upside target of 320 and 325.
So that's a buy call coming in on Jio Financial Services, 320 to 325. Those are the targets we could see on the stock. But in an otherwise weak market, another stock that's holding up at LIC. It reported very strong set of numbers. Kanishka, the stock is holding up 8%. Tell us what stood out in the numbers in the quarter gone by.
That's right, Ashesha. Very good afternoon. Like you said, LIC is in spotlight today as the insurer posted a very strong set of Q4 numbers. The company has reported a 38% jump in net profit to over 19,000 crore, which takes its full year PAT to 48,151 crore rupees. That's an 18% rise on a year-on-year basis. LIC's value of new business, that is VNB margin, also improved 80 basis points to 17.6% in FY25. Management, however, has noted that FY25 was a bit challenging due to regulatory changes, but the company did ramp up its equity market exposure, investing about 1.85 lakh rupees 1.85 lakh crore rupees and booking 73,000 crore in profits, up that is 19% on a year-on-year basis. Although the company's stake purchase in a health insurer is in advanced stages with a decision expected in the next 2 to 3 months. While the company has a very positive outlook, brokerages remain divided on LIC. Macquarie maintains an outperform with a target price of 1215. Goldman Sachs has a neutral stance with 880 rupees as the target price. Motilal Oswal stays a buy with a target price of 1050 rupees. Now, if you look at the stock price, like you said, it's seen a very strong rally in an otherwise weak market, an uptick of 8% coming in.
Okay, good move coming in on LIC, and the stock has seen stellar performance. The company saw some good performance in Q4 with record policies sold. We interacted exclusively with Siddharth Mohanty, the MD and CEO of LIC. Let's go across and revisit what he had to tell us.
The non-par share has shown 50% growth, more than 50%, and from 18 to 27%. In coming days, my sense is in the current year, we are expecting some further growth in non-par share to AP. Further growth will be there. It will go beyond 30% also. That is our expectation. Any objective will be to demonstrate further growth in VNB margin, but it will be very difficult to give any specific number or a specific year. But current year, definitely our objective will be at least 2-3% plus over whatever we have done in the current last year, that we are expecting. That work is going on, and very soon I think that will be finalized. Within 2 to 3 months time, our board will take a call, how much stake will buy, which company will buy, what should be the valuation. All those things, finalization will be done within 2 to 3 months by the board. Dive project last 1.5 year, 2 year, we are working on that, and now almost finalized. All milestones will be achieved. I think Q2 onwards, milestones will be achieved.
That's the word coming in from the management of LIC. The stock is holding up with gains of more than 7% in today's trading session. But on that note, we need to slip into a short break. We'll discuss many more buzzers on the other side of the break. Stay tuned.
Hi there, welcome back to Market Fatafat. Let's talk about some more stocks that are in focus, and let's talk about another earnings candidate, that's Minda Corp. And if you take a look at the numbers on a consolidated basis, revenue has come in at 1,321 crores. Remember, the numbers came out in yesterday's trading session close to market close. So, if just to take you again through what the numbers look like, revenue was up 8.7%, net profit took a little bit of a knock, down 26.5%, EBITDA was up 10.3%, and EBITDA margins have also seen a little bit of an uptick, coming at 11.6% compared to 11.4% on a year-on-year basis. Today we have a brokerage note coming in by Nuvama on Minda Corp, wherein they've maintained the buy rating but have cut the target price to 630 rupees compared to 650 rupees earlier. They say that Q4 EBITDA was beat and outlook remains bright. The company is a strong play on premiumization, regulatory changes and EV penetration, but they are cutting FY26 and FY27 estimates of EPS by 8% and 3% respectively, factoring in lower revenue assumptions and equity dilution. They're also building in a revenue EBITDA CAGR of 15% and 19% over FY25 to FY27, along with an average return on invested capital of 16%. So slightly negative note coming in from Nuvama, wherein they have cut the revenue target as well as the price target, and on the back of that the stock is under a little bit of a pressure as we speak.
But another stock which is holding up in an otherwise weak market is Viatech Verbag. In fact, the stock is up 4% as we speak. Sachin, tell us, what do charts indicate? 1700 on the card soon?
Yeah, definitely. Well, overall, if we talk about the technical basis, so today the stock has confirmed a breakout of its double bottom patterns. The levels was near around 1650, and since that time, the stock prices are holding that levels. And if we talk about the other key aspects like moving averages and super trend, so all are supporting to this overall momentum. So I believe 1700, or even if prices sustain above 1700 with some consolidation, so it may also test 1750 levels. So on the higher side, I'm expecting 1700 or 1750 as a target, while on the lower side, the support is placed near around 1650. So, 1580. So that should consider as a stop loss point.
So that's the view coming in on Viatech Vabag. But ITI, that's the stock in focus today on the back of very strong set of numbers that the company reported. And that is the reason the stock is holding up with gains in excess of 9.5% as we speak. Revenue for the quarter gone by saw an uptick of a solid 74% on a year-on-year basis. So revenue stood at 1,046 crores versus just 600 crores that the company had reported same time last year. Losses, meanwhile, have narrowed substantially on a year-on-year basis. So same time last year, company reported a loss of nearly 440 crores, and that has narrowed to just 4.5 crores in the quarter gone by. EBITDA loss too has narrowed to 28 crores. So very strong set of numbers. Losses have narrowed. Revenues have seen a solid uptick, and that is the reason the stock is holding up with gains of nearly 9.5% today.
Okay, stellar moves coming in ITI Limited. Good set of quarter four numbers, and it's gaining even when the market is largely sideways. But Ravinder, coming to you, Info Edge is the stock that you've picked out for us. Tell us why this has made it to your list today.
Well, as Info Edge is in focus on back of brokerage note where Nuvama has maintained their buy rating, but they have cut target price to rupees 1700 as compared to 1820, and they have cut EPS estimate for FY 26 to 27 by 5.8% to 7.7%. And JM Financial has also come out with a note on Info Edge where they have downgraded the stock to buy from hold and cut target price to rupees 1500 from 1560. JM Financial expect billing trends to sustain near historical average in the near term, especially in the recruitment segment. The scope for margin expansion appears limited on the basis of management commentary that the mentioned spends are likely to be continue and the key downside risks are the company guided step in ad spend in different business affecting margin and risk to Naukri.com from lower hiring in some sectors, especially IT. They have trimmed standalone EPS estimate for FY 26 to 27 8 to 11%, and Macquarie has also come out with a note where they have maintained underperform rating with target price of rupees 1048. So back of this note, stock is down approx 1%.
Okay, but we also caught up with Hitesh Oberoi, MD and CEO at Info Edge India, to know about company's 1,000 crore investment plan in the coming years. Let's listen into that excerpt.
Latest news that you are looking at 1,000 crore fund. I'm assuming that this 1,000 crore would be another fund where you would be looking at making fresh investments. How did you arrive at this number of 1,000 crore, and what could be the shelf life of this fund, and minus this 1,000 crore, what happens to cash in the balance sheet?
So, we are sitting on around, I think last I checked, we had about 4,800 crores of cash, between between Info Edge and our subsidiary companies. We, of course, need to deploy this cash productively. There is some cash we need for operations and for rainy days. And if there is an acquisition opportunity which comes our way. Outside that, of course, we give dividends to shareholders. We just announced a dividend. We upped the dividend this year. But after that also, there's a lot of cash which is left and which can be deployed. We have been very successful at, spotting companies early. So we continue to make early stage investments. And normally the fund life is long, is like 10+2 or 12+2 in most of the funds we sort of do, because it takes a long time for a company to make it in India. It's not as if you get a company making it really big in 3 or 4 years. Often it takes 10 or 12 years for companies to make it. Normally, when we announce a fund, it takes 3 or 4 years to deploy the capital in these to find these companies and to do the first round, and then there are follow-on rounds going forward. So in the more successful companies, we do follow-ons and so on and so forth. So that's how this all works. So we've approved 1,000 crores of fresh investments. And these will be deployed, I suspect, over the next 3 or 4 or 5 years.
Okay, that's the word coming in from the management of Info Edge. But let's move on. And Kanishka, you've picked out Tata Steel for us. Tell us what the news flow is there, because the stock has been in focus since the opening bell today.
That's right. Tata Steel has actually filed a fresh writ petition before the Delhi High Court seeking relief, including compensation of 757 crore rupees along with interest for cancellation of an Odisha coal block and non-payment of pending dues to the company. Formerly known as Bhushan Steel Limited, now Tata Steel BSL Limited, and merged with the parent in November 2021. The company was allocated the new coal block in Orissa in 2006 and it invested in its development. However, the Supreme Court cancelled the allocation in 2014 amid the coal scam allegations of the UPA era, leading to a subsequent auction of the part of the block. Now, under the Coal Mine Special Provisions Act 2015, Bhushan Steel was entitled to for compensation from the new allottee for its development expenses. Now, to claim this, Tata Steel, as the new owner, has filed a writ petition with the Delhi court, expecting that compensation back. Now, if you look at the stock, it's down about 0.5% in trade today.
Okay, so that's the take on that stock, but let's move on. And the Consumer Affairs Ministry is meeting key e-commerce companies today to combat dark patterns that misled consumers. Major players like Meta, Apple, Amazon are set to attend. Sameer is here with more details on that. Sameer.
The Union Consumer Affairs Minister Prahlad Joshi is going to chair a very important meeting with the stakeholders on the issue of dark patterns. This meeting is going to be held on Wednesday, and the stakeholders include from tech giants to even the travel portals as well. The official statement by the ministry mentions that the players or the stakeholders include the Meta representative, Apple, Ixigo, Make My Trip. So these all players are going to be a part of this meeting. Not just this, the e-commerce entity, whether it be Amazon or Flipkart, they are also going to be a part of this meeting, which is going to be held on the subject of dark patterns. So the government understands that because of these dark patterns, which majorly influences the consumer's choice, it influences and make them compelled to make a decision which is not very much informed. An uninformed decision through the dark patterns is what is that is concerning the government, that this is a biased sort of a business tactic and it should be stopped. Not just this, the government will also try to understand from the stakeholders that what sort of steps could be taken in to stop these dark patterns, and from the compliance perspective, how strict can it be made in coming days. So this meeting is going to be chaired by Prahlad Joshi, and it is to be understood that a particular time frame might be given in to all the stakeholders that they should stop practicing these dark patterns, or else in coming days some strict action or a hefty penalty might be imposed.
Sameer, thanks so much for joining us with all those details, but we need to slip into a short break on that note, but we'll discuss many more buzzers on the other side of the break. Stay tuned.
If you like this video, then like, share and subscribe to ET Now.